Welcome back to another weekly market breakdown. Now today we are going to take a look at the NASDAQ 100, the US30, S&P 500, the German 30 index, as well as the Usoil and gold from a technical perspective. Now if you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, please smash the like button for the YouTube algorithm. And as always, let me know down in the comments below exactly what it is that you would like for me to cover in my next video. Now before we get down to the technical analysis, it's very important to just go and reflect in terms of what we had last week. Now you can see over here, last week, Wall Street, week ahead, battered US stocks may not be a bargain as investors brave for inflation data. What that means, before we get into the article, it basically means that investors feel like stocks are still overvalued and they can still go lower before they get to the actual valuation process. And we're also waiting for CPI data, which we are going to be speaking about very shortly. Now basically what we do want to have a look at here quickly is that it says here US stocks stumble this year, putting an increased focus on equity valuations as investors assess whether recently discounted shares are worth buying in the face of hawkish Federal Reserve and widespread geopolitical uncertainty between that's with Russia and Ukraine. Here we go. Stocks are getting close to fair valuation, but they are not there yet. But they are not quite there yet, says this guy is a portfolio manager. Okay, if you take into account bond yields, inflation, what is going on with the GDP and the broad economy, they're not quite there yet. So they still feel like stocks are overvalued, and this move to the downside is quite expected. Also, wild swings shook the market in the past week after the Federal Reserve, we know, introduced that 50% basis hike that we saw. I think it was on Wednesday, if I'm not correctly, and then the markets came and we got that. There we go. That's what we got on Wednesday, and the Nasdaq took another turn for the worst and expected a 50 basis point rate hike increase and signaled similar moves for the meeting ahead as it tries to quell the highest annual inflation rates in 40 years. The index has declined 5 straight weeks, its losing streak since mid-2011. Now there is no reason for why the Nasdaq took that tumble, and it's something I've been speaking about for so many months now, that the Nasdaq is going to fall. But this week we've got something very interesting coming out, which is the US CPI data. Now this is the consumer index, which measures the price and services spent by consumers. Now if these numbers, which is forecast to be lower, I'm not sure why it's that low, but if these numbers is higher, then that it just means more inflation. But let's jump straight into this, and this data is coming out on Wednesday, so we'll see it by Wednesday. But before then, we can still make use of the opportunity that we have in the market. Now if you start here on the monthly time frame, what do we have now? It's quite clear that the NASDAQ 100 had officially moved into bearish territory. Firstly, the market is now trading below a very strong structural level, but if we do look left, we can also see the market had now also found sorry about that. So we can see how the market over here printed the level of support, got broken, came to test it as resistance. This resistance got broken and it's now being tested as support. So the market is now stuck within a consolidation phase from a monthly perspective, potentially hinting a short move to the upside before the continuation to the downside. Now from a weekly perspective, we can see over here, this is the structure I was referring to. Here we can see the market had printed support to resistance and testing it as resistance, now printing the first weekly equal low. As we can see, again, slight indication that upward move is expected. From the daily time frame, what do we see? Now here on the daily perspective, we can firstly see how the Nasdaq was stuck within a consolidation for almost the entire week last week, and the market finally broke up of that level. We had that that fake move there to complete this to complete the liquidity zone when the Federal Reserve announced an interest rate hike, and the Nasdaq took a plummet to the downside because we are trading below a strong level of support, which is now turned resistance, because that's how price action work. There's a strong level of resistance, and once resistance gets broken, it becomes support. Now we also have this massive impulse. After an impulse, we expect a correction. Now the best way to measure that correction is by taking off Fibonacci from the high to the low. Now we can see the 0.32 is not lining up perfectly with that structure, so if we slightly adjust our fib slightly lower, this is potentially where we can expect the market to continue lower first before pulling back and then continuing lower there as well. Now next up, we are going to take a look at the US30, which is the Dow Jones. Know that the Dow Jones forecasted last week's NFP numbers came through slightly higher than anticipated, but we will speak about that tomorrow when we look at the FX pairs. Now we start on the monthly time frame. What do we see now from a monthly perspective? Once again, it's quite obvious that this market had now finally broken below the strong level of support, came to test it as resistance. Definitely a continuation to the downside expected, as I discussed last week, Saturday as well. Now from a weekly perspective, we can see this is typical the retail trader price action, or typical price action over here. The market is currently testing strong level of support. Now it's obvious that the market should pull back from this level, but the pullback will not be as long as one would anticipate it. The problem that we have over here, ladies and gentlemen, is this market had stuck in this consolidation. We did not get the clear break as we anticipated it, because we can see how the market had came into this consolidation on the 22nd of April, and the market had just been trading sideways. Friday we saw the market once again close above that level, giving us a confirmation that this level had not clearly been broken. Now the best way to approach a consolidation market is this market can easily continue to the upside and then come back. So the best way to approach a situation like this, we could either get a break to the upside and then that continuation is less likely to happen. But the best way to approach a situation is wait for a clear break below this level and then start looking for that continuation to the downside there as well. Now like I said, this market could easily continue to the upside as well and then start that continuation to the downside. The buyers remain bearish on the stock market until the US inflation starts to reduce, which is not going to be happening anytime soon. Next up, we got the SNP500. Now, this market has printed the same type of price action. We had the market print this information, complete this information at the neckline from monthly perspective, printed support, broken it, came to test it as resistance, and that continuation to the downside is definitely expected. Definitely expect the market to go and test that previous level of resistance that is now acting as support. Now from a weekly perspective, what do we see? Now here on the weekly time frame, it's clear that we had a clear break. Yeah, we not go that far, but we had a clear break below the strong level of support. The market then came back to test it as resistance. Now there is a high possibility that this market can continue lower into next week before we get any pullback in this market there as well. Now from a daily perspective, what do we see? Now from a daily perspective, we have the same type of price action that we have on the Dow Jones. Market clearly did not close below that level as we anticipated, giving us an indication that it's just back into that range there as well. Now the best way, if you didn't guess it yet, we need a clear daily break below this level to confirm that all of this support would then be turned resistance. Alternatively, we might get a higher pullback and then see that continuation by Wednesday when the CPI numbers gets released to the downside. Next up, we've got the GER30 index. Now if you start on the monthly time frame, the price action is quite easy to read. The market printed strong level of support, broke below that, came to test it as a resistance. Definitely a continuation to the downside expected there as well. From a weekly perspective, what do we see? Now from the weekly time frame, it's obviously clear that we had this market broke below this level, tested it there with those massive liquidity. Jesus, that's just like liquidity wicks, and there's no question to whether or not this market is going to continue this move to the downside, as I said last week Friday, last week Saturday as well. Now we can see on the daily time frame how the market is about to complete this information. Now after information, we expect to pull back to the neckline before that continuation to the downside. Also, if we take our Fibonacci from the low to this low over here, because that's where we expect the market to pull back, we should be able to get a 0.38 to pull back exactly to the neckline of the information. Now the best way to approach the situation is clear. We wait for the market to go and print an equal low, come back for the pullback, and then start looking for that selling opportunity to the downside for the market to complete the equal low of as identified from the weekly perspective. Next up, we are going to take at the situation we got here on US oil. Now, US oil is also quite very interesting. Now, US oil, as I've said many times, is supposed to fill in that wick that we see on the monthly time frame, and this is exactly what we will be looking at trading. Now, from a weekly perspective, what do we see? Now, we can see here the market is yet to complete a W formation. Now, a W formation is considered a bullish pattern from a technical perspective. Now, there is a short-term buying opportunity on this market where we can expect that market to print an equal high. So going into next week, definitely a buying opportunity before that pullback and then that continuation to the downside. So going into next week, what we are going to do is wait for the market to go slightly higher. Then on that pullback, we are definitely going to wait for the market to pull back to this level over here. Why? Because this level over here acted as a strong level of support, got broken and became a resistance. The market tested the resistance twice, broke above that resistance. All of that resistance is now turned support. So we definitely expect the market to pull back after it break that level, to come and test the neckline of the W formation as identified from a weekly perspective. Next up, we do have gold. Now, gold is probably one of the most bearish looking pairs that we could potentially be looking at, especially with the price of the dollar increasing as it does now. But on the monthly time frame, we have this massive impulse and we have this correction, so we can definitely expect a continuation to the upside. Gold, I've been speaking about, anticipating, spreading all of the reasons why we could see that move to the downside. Gold broken above a strong level of resistance and it's testing it as support, giving us some sort of an indication there is possibly a continuation to the upside expected. Now, here on the weekly time frame, what do we see? Now, from a weekly perspective, gold is currently testing strong level of resistance that's turned support. Gold also printed the same formation. We can expect that pullback and potentially see the market continue to the downside there further as well. Now, here on the daily time frame, what do we see? Now, on the daily time frame, gold is currently trading at a bearish level. Now, this level over here acted as strong support, broke below that, became resistance, and all of that resistance is now being tested. Now, there's two ways to go about the situation. Firstly, if we go back to the weekly time frame, we obviously expect the market to pull back to this level before we get that continuation to the downside. Okay, now if you drop down on the daily time frame, you can obviously see how the market is being stuck with by this level over here. Now, I would wait for a clear break or daily close above that level, and then on the retest, start looking for the buying opportunities. In doing so, the market will then print this inverted head and shoulders, which is considered a bullish pattern from a technical perspective. The market will also easily start this meltdown to the downside. So as traders, we have to be reactive and not predictive. We need to learn to adapt to the ever-changing market environment. Now, the best way to approach the situation is to wait for Monday. If we do get a clear daily close above this level, then we're definitely bullish on this. But if we don't get a clear break above this level, then you can definitely expect this market to continue melting to the downside. Now, that is it from my side, ladies and gentlemen. Thank you for your time. And as always, cheers for years.